Welcome to Illuminati Silver. We tell it the truth about silver. Today is Sunday, the 7th of July 2024. We're publishing our gold and silver weekly update for the week ending the 5th of July. Gold and silver resumed their upward surge. It appears their consolidation is over. Is it at all possible that we may see all-time highs in gold over the next week or two and 11-year highs in silver? Well, let's take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now gold rose $65 last week, rising from $2,327 to $2,392, having hit a high of 2,393 and a low of 2,319, a rise of 2.8%. And as you can see, gold finished very close to its weekly high. The spread between high and low was $74. Now last weekend we said gold would trade between 22.80 and 24, which it did, having spent Wednesday onwards in the upper quartile and aiming for the top of our outlier range. In sterling terms, it finished the week up £28 at £1,870, and in euros it closed at €2,212, up €38. We are certainly predicting £1,900 gold this week. Silver rose $2.10, rising from $29.14 to $31.24. Looks like that $30 resistance level has now been shattered, having hit a high of $31.71 and a low of $28.99, a rise of 7.2%. The difference between its high and low was $2.72. Now last weekend we predicted silver will trade between $28 and $31.50, and although it did trade and close within that range for a brief moment, a minute or two literally, it did peak slightly above the top of that range by 21 cents. In sterling terms, it was up £1.33 at 24.46, and in euros it closed at 28.90 euros. That's up 1.64 euros. The gold to silver ratio fell over 3 points, from 79.8 to 1 to 76.6 to 1. Bitcoin was down $3,884 on the week at $57,673, though it has been lower. Equities were broadly higher. The Dow Jones up 257 points at 39,375. The S&P up 107 at 5,567. The Nasdaq Composite up 620 at 18,352. And the FTSE 100 index up 39 at 8,203. If the economic data coming out this week is favourable, we could see some of these indices hitting all-time highs again. Oils were also higher. Brent crude up $1.54 at $86.54, and WTI crude up $1.62 at $83.16. Dollar index down almost 1 point at 104.87. Now last week we saw some interesting economic data coming out of the United States. Manufacturing PMIs for June were marginally lower, as were automobile sales. The ADP employment report came in at 150,000 new jobs for June, compared with 157,000 for May, and expectations of 160,000. Initial jobless claims were higher, and services PMIs were generally lower. The jobs report on Friday showed 206,000 new jobs for June, compared with 218,000 the previous month, and against expectations of 200,000. So, although the figures were slightly higher than expectations, the government did reveal the fact that there were 111,000 fewer jobs created in May and April than they had originally reported. Now, combined, all this data suggests the US economy is slowing. The unemployment rate ticked up by 0.1%, and so the likelihood of a reduction in rates in September has now increased to 72%. I think off the top of my head it was closer to 58% the previous month. Some traders are mooting the possibility of a second rate cut in December, though we believe that may be a little too optimistic at this stage. Let's see that oil price fall a little first. This news boosted precious metal prices and equity markets and knocked the value of the US dollar down a little. Now, this coming Thursday will reveal to some degree if the battle against inflation is heading in the right direction or not, as the CPI data for June is to be announced. Now, markets are not expecting any great shakes here on the monthly basis, but they are anticipating that the year-over-year CPI figures will fall from 3.3% to 3.1%, and the core CPI to hold firm at 3.4%. We also have the producer price index figures coming out on Friday, but Thursday is really the day to watch. In addition to this, we have Powell's congressional testimony on Tuesday and Wednesday, which could also potentially help the precious metals market. Now, technical analysts are predicting gold has support at $2,363 and resistance at $2,450, which is gold's all-time high. If bullish momentum occurs, there could feasibly be a breakout surpassing this all-time high within the next 7 to 10 days. So this coming week looks positive for gold. As far as silver is concerned, percentage-wise, it performed better than gold and may do so again this week. If the inflation data is favorable and the Fed's rhetoric dovish, we could see another significant rise in silver. It's already reached its 1-month high again and could easily surpass the current figure. Technical analysts forecast resistance at $32.52 and support at $28.57, roughly a $4 spread. So what is our forecast for this coming week? Well, providing the economic data continues its recent trend and there are no geopolitical surprises, we expect to see gold trade between $2,350 and $2,450, with 2325 and 2475 as outliers. So that's above the all-time high. Silver, we envisage, will trade between $30.50 and $33, with $29.75 should things go awry, and $33.50 as outliers. But if that inflation data significantly falls, we don't believe it will because the oil price is going to keep a lot of it up. If it significantly falls, you could even beat that $33.50 level. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter. Have what's left of an enjoyable weekend, but it certainly looks, for those who have invested in gold and silver, and arguably the equity markets, to be a prosperous week ahead.